Welcome back to Stocks and Crypto Insiders. Question for traders right up front. Were you ready for an Ethereum breakout today? Today is all about Ether, up roughly 14% on August 22nd, 2025, while Bitcoin briefly tumbled and then recovered. This episode explains why Ethereum surged, what drove the rotation, and what traders should watch next. First, the price action. Ethereum rallied into the mid-4000s by European afternoon. Heavy buying hit staking-related and custody-ready products. That pushed spot demand and squeezed short positions on derivatives venues. Short covers amplified the rally and fed further upside. At the same time, Bitcoin saw forced selling of leveraged longs, creating a headline scare, but buyers stepped back in and Bitcoin recovered. Second, the core drivers. Macro cues from Jackson Hole shifted risk appetite toward a lower-for-longer outlook that reopened flows into risk assets. For Ethereum specifically, growing institutional interest in staking, custody availability, and ETF progress drew capital. Concentrated derivatives positioning turned those flows into momentum. Third, market mechanics. Watch funding rates, open interest, and liquidation alerts on major exchanges. Those metrics reveal where leverage sits and where squeezes can trigger. Monitor large exchange inflows and custody movements for Ether. Institutional custody inflows can precede rallies. Staking deposit trends are early signs of institutional conviction. Practical tactics. Hedge exposure with options if available. Use limit orders to reduce slippage. Rebalance position size after outsized moves, and consider short-dated protection when holding big unrealized gains. Keep reserve cash to deploy on confirmed dips, and review tax implications for short-term trading. After today's split move, are you increasing your Ether allocation or keeping a balanced crypto position? Drop your strategy in the comments and explain your time horizon. Risk notes. Volatility is structural in crypto markets. Rapid moves can be exaggerated by leverage and thin liquidity in certain instruments. Institutional adoption supports the Ether thesis, but it does not remove short-term liquidity risk or margin-driven volatility. Scenario planning matters. If risk appetite holds, Ethereum flows could extend the rally. If macro sentiment reverses, both assets may correct. Signals to watch over the next 24 to 72 hours. Funding rate divergence between Ether and Bitcoin, spikes in spot and derivatives volume, large staking deposit announcements or custody filings, and equity futures for broader risk appetite cues. These indicators help determine if today's move is momentum-driven or has durable institutional backing. 3 quick takeaways. 1. Ethereum's rally reflects staking demand and derivatives dynamics. 2. Market structure and leverage can create sharp divergences. 3. Risk management and timing matter. Avoid emotional chasing after explosive moves and plan scenario-based entries and exits. Thanks for watching Stocks and Crypto Insiders. If this helped, subscribe now and hit the bell for more market breakdowns every other day. Comment below. Did you buy Ether, sell Bitcoin, or hold through the volatility? I read comments and will pin the best strategies. We'll see you in the next update.